Ladies and gentlemen, welcome to our latest webinar in our series on legal and tax basics in Ukraine. Today it is about customs and the tax system. We have 5 distinguished speakers on the topic that are all involved in our work at the Chamber of Commerce. We have Thomas Otten of Otten Consulting, Dr. Wilfried Serles of Grand Thornton, Artem Barinov of the Schneider Group, Oleksandr Minin of KM Partners WTS Consulting, and of the same company, Dr. Shynkarenko. This is 5 speakers for an hour, obviously a bit of a challenge. We have allocated 10 minutes to each speakers, and I'm going to keep the time for everyone and give you a gentle hint after 9 minutes and about 30 seconds that your presentation should draw to a close. Yeah, let's get going. Thomas Otten of Otten Consulting is first. Thomas, the floor is yours.
Yeah, hello everybody. Also warm welcome from my side. So let's start directly. I will share my presentation. So I think it can be seen now.
Yes.
Okay, so here we go. So I will elaborate our general taxation system and also a bit about form over substance issues, and the details will follow up with my colleagues afterwards. So let's get started. An overview about taxes we have in Ukraine, the tax system. So we have the profit tax, which is rather similar to the German Körperschaftssteuer. And then we have no trade tax, so there is no Gewerbesteuer in Ukraine. Then we have the VAT, which functions as we know it from Western Europe, which means the final consumer pays finally the VAT. Then we have the personal income tax, which includes tax on employment, interest, dividends, capital gains, and there was introduced meanwhile a special military tax, which is rather close administrated to the personal income tax. Moreover, we have tax on real estate and a transport tax, but they are of minor importance. Therefore, I just won't elaborate here further on this one. What needs to be told about is simplified taxation. I'm not going to elaborate here on details, but here it should be understood that we have in Ukraine in 2024 1.5 million of private entrepreneurs which are operating within that tax system. And they count for 50 billion euros of turnover in 24, which is quite significant if you compare this to the GDP of Ukraine, which is 184 billion US dollars. That of course doesn't mean that it's almost 1/3 within that group, but still very, very significant. Therefore, this should be mentioned, and later on I will tell about what that means as well. So let's move forward. Then we have double taxation treatment between Germany and Ukraine in place, which is based on the general OECD model tax convention. Ukraine has, with other countries, with most European countries, a similar treaty. This has been recently updated 2 weeks ago with some minor changes. For example, that the withholding tax on dividends will increase in case there is a minor sharehold of 20%, or the withholding tax on interest will increase starting with 27 as well. That should be so far enough for the double taxation treaty. Now I would like to switch to the fundamentals of Ukrainian accounting, which affects, and then we come to form over substance as well. So Ukrainian accounting standards, so-called UA-GAAP, are in fact only since 1999. So which means there is no historical understanding of under accounting standards, but so far we of course have now 25 years experience in that. And interesting for foreign investors, for sure, financial statements can be prepared either according to UA-GAAP or according to IFRS. This is an alternative which is in place since 2013. Since January 2015, profit tax returns based exclusively on financial statements with some adjustments, but on this Dr. Serles will elaborate for sure what that means. But in practice, however, tax law remains the primary focus, and here we come to so-called form over substance. What that means, I will provide some examples. An example for form over substance is fuel refills. So if you're tanking, if you go to the gas station and refill your corporate car, have to be activated first into the balance and only written off as expense according the obligatory logbook, which means a logbook is obligatory, and in practice, the logbook is very often held and filled in the accounting department. Then we have a state-mandated chart of accounts, which means you cannot use your own chart of accounts as you're used to. But there is an exemption in case you do the accounting according IFRS, then you can use your own chart of accounts, but we wouldn't recommend doing so because this would really lead to significant problems with tax inspections. They actually really don't like that. But it's possible you can use your own chart of accounts. Therefore, you just need to adjust your accounting policy. Another form of example of form or substance is salary calculation. And here I can tell you this is a real nightmare. It's just a very small example. So if somebody's going on holiday of your staff members, then there needs to be, for the holidays, paid the average salary of the last 12 months. According days he is going to leave, and there needs to be included as well bonus payments and this is really a nightmare, these kind of calculations. Therefore, we say that we would estimate that more than 99% of all salary calculations are not correct. That's a big problem, because if it's overlapping, somebody going, one calculation is wrong, and then the subsequent calculations will be wrong as well, because they affect the initial wrong calculation affects the subsequent calculations. And there you need to be careful, because if you dismiss somebody and he didn't receive all final payments, then he can not only, of course, apply for getting reimbursed what was not paid, but the dismissal is even invalid. This needs to be taken into consideration. Therefore, you need to be really careful here. So Ukrainian accounting documents, we have also form over substance. We have various documents. These include service confirmation protocol, the so-called ACT, and the VAT certificate, Podatkova nakladna, and the delivery note nakladna. What is missing here, the invoice itself is an invitation to pay only, but not a basic document for proper accounting. There are some exceptions with the invoice being an accounting document just recently introduced for international services. There you can use the invoice as accounting document, but there you need to be careful as well, because if in case in your contract is written services need to be closed by some act, then this new regulation doesn't work, because then you need to change your contracts as well. As a practical result, we have a significantly higher number of bookings due to booking on interim accounts, which means because if for example, the act is missing and the act needs to be signed by both parties on provided services, then even if the service has been provided and already paid, it is still in the balance on an interim account on a received advance payment. Only when the act has been provided, you can close the booking. And you have significant more extensive documentation due to form or substance. Here you can understand just the example on refilling the car, which applies the same for if you buy a lot of paper. This is also needs to be activated and then written off by usage. And all documents need to be signed by the general director. This can be delegated via a power of attorney, but still then the attorney receiver, of course, acts on behalf of the director. That here to so far. Examples of incorrect accounting, I mentioned at the beginning the simplified taxation. There you have very often recorded personnel expenses often do not correspond to the actual expenses, because many Ukrainian companies, unfortunately, do not employ the people, but hire them as so-called private entrepreneurs. And the difference here is roughly about 30% of expense, because they don't have to pay social insurance, and the tax rate for simplified taxation in that case is 5% instead of 18%. The state is going after it, but not to that extent. The RK has also mentioned that already in recent meetings and with government representatives to change that, but there's a long way to go in that case. And in this case, as said, mechanism for tax optimization is external services, and here you can even via these external services find bribes properly accounted building permits via received official services. That's here for so far enough. Then last slide in my case. We have very strict deadlines. I think Mr. Serles will elaborate on when financial statements need to be submitted, which is within 2 months, which is quite close. But also, in case you do not agree to a tax assessment, for example, based on a tax audit, then you only have 10 days after you received these written documents to object to this. If you do not object within these mentioned 10 days, then this tax assessment becomes due and you have to pay. You still can go to court afterwards within another 3 years and claim for getting a reimbursement of the taxes paid, but this needs to be taken into consideration. Additional point here, you can either choose to go to the administrative procedure or directly go to courts. We would always recommend going directly to court because the administrative procedures are mainly, let's say, a waste of time and useless unless you want to win sometime, then you can go there. But if you want to receive a result quicker, then you better take directly the core lawsuit. So that it is from my side already. I think I was within the 10 minutes for sure, I would say. And then I give back the word to Reiner. Thank you for your attention. If you have questions later on, we can ask.
Thank you very much, Thomas, also for keeping within the time limits. We will take questions after all the presenters have spoken. And I would like to ask Mr. Wilfried Serles to come forward and give his presentation again. I use the chat function after 9:30 to send a message reminding of the last 30 seconds.
Thank you very much. Can I see my presentation?
Yes.
All right. After this wonderful introduction of Thomas Otten, I'm going to focus on the basics of corporate income tax, which is the tax for legal persons. Corporate income tax starts with an assessment of the tax rate. We have 3 tax rates in Ukraine. The standard tax rate of 18%, which from an international perspective, I would see as within international standards and expectations. Then there is an increased tax for banks and financial institutions until 2025, and from 2026, banks have to pay even the tax rate of 50%, which is from an international standard absolutely high. The tax which needs to be paid is not just the product of the tax rate, but also a product of the tax base. So let's take a look at the tax base and how to calculate the tax base. Small companies up to an income of 40 million hryvnia per year. For them, the tax base is the annual accounting profit prepared, as Thomas has introduced, either based on local standards or IFRS. Based on this, the annual tax return is required to be filed within 60 days after the end of the year. For larger taxpayers with an annual income of 40 million plus hryvnia per year, there is a different system valid. They have to submit quarterly tax statements within 40 days after the end of the quarter, and they have to submit an annual tax statements within 60 days after the end of the year. For the larger taxpayers, the tax base is derived from the accounting profit based on local accounting standards or IFRS, adjusted for tax purposes.
I'm sorry, Mr. Serles. Sorry for interrupting, but we don't see the full version of the presentation. We see only the gray
Do you see now the full version?
Now we see.
Yeah. Okay.
Yeah.
Perfect.
Thanks.
Thank you. So the larger taxpayers pay their tax based on a tax base which is derived from the accounting profit and adjusted for tax purposes. So in this case, in order to define the final tax base, you have to do additional exercises. And talking about these tax adjustments, we distinguish between temporary differences, timing differences, and permanent differences. What is generally valid for temporary differences is very easily said that tax expenses in those cases are accepted once the costs are paid. So if a provision, as an example, is accrued for future costs related to income of a specific year, then a provision will be created in accounting. However, this provision is not tax deductible. If the amount will be then paid in the next year, then we have the tax expense. The same principle is valid for allowances for impairment of accounts receivable or expected credit losses, whereby I would like to note that these rules do not apply for banks and financial institutions because there are specific regimes for those type of taxpayers. And last but not least, tax depreciations are calculated based on the tax code and supplement tax code and instead of the accounting depreciations. So that was an overview of temporary differences. Permanent differences are very roughly said all kind of fines and penalties, regardless if they are paid to the government or to contractual partners. Not tax deductible are non-repayable financial assistance provided to affiliated entities that have incurred losses. So obviously the tax administration wants to prevent that losses achieved in company A lead to additional expenses in company B if this company B, a related party, pays a non-repayable financial assistance to company A. Then not tax deductibles are royalties exceeding 4% of the prior year's net income. Details will be presented later. And not tax deductible are charitable contributions exceeding 4%, or if at least 4% was donated to NPOs, another 4% to charitable organizations, which are included in a special list which is published by the tax administration. As a general rule, the absence of a business purpose of a transaction without reasonable economic background or justification in no way leads to a tax expense. That's the general rule which the tax administration uses to kill business they don't want to see. And also generally said, pricing of goods, works, or services which does not comply with the arm's length principle are also not tax deductible. Here is the high-level overview of tax depreciation for certain fixed assets, ranging from buildings 20 years to tools, equipment, supplies, furniture 4 years. I would say that these useful lives tax depreciations are quite in the range also with other with tax legislation in other countries. So no specifics with that. Thin capitalization rules is also something you should take into account if the Ukrainian entity is dealing and financed by non-resident, by the mother company. So in this case, you have to make sure, you have to look at the equity structure of the Ukrainian company, and in case the debt obligations to non-residents exceed the equity by more than 3.5, then the interest is deductible only up to 30% of a certain base, which this base will be calculated based on the tax base plus finance costs plus tax depreciation. Interest exceeding these limits are not tax deductible. The exemptions exist for interest paid in favor of foreign banks and paid in favor of international finance institution. I would like to note that these thin cap rules do not apply to financial institutions and leasing companies. Tax losses, as the economy is poor and many Ukrainian entities are struggling with their financial performance, there are tax losses. And the question with tax losses is always, can they be used to compensate future profits? Very simply said, for large taxpayers, yes. Within certain limits, a large taxpayer is defined a legal entity that within a period of 4 consecutive quarters had achieved revenues exceeding 50 million euro or has paid taxes exceeding 1.5 million euro. So these large taxpayers have limited possibilities to use their tax losses. They can use only 50% of the loss from the previous period. And if the loss is less than 10% of the current year's profit, then the current year's profit must be fully taxed. For all other taxpayers, there are no restrictions. They can use their tax losses to compensate future profits in an unlimited way. As specific, I would like to mention for Germany, Deutsche Personengesellschaften are considered as problematic entities from Ukrainian tax point of view, except all members, because since this was amended in 2025, except all members of the partnership are residents of the same country. So if we have a German OHG and with 3 partners and all those 3 partners are German, then we don't have a problem with the German OHG. If this is not the case, then you need to take a critical look on the transactions, and in principle, you have to increase the tax base by 30% of the value of goods, services sold or purchased with this entity, unless you prove based on a transfer price documentation that these transactions are arm's length. I'm not going to point why we have that. It's not logically at all. We have to live with this handicap for German and other Personengesellschaften. Last but not least, transfer price documentations must be prepared by entities with revenues exceeding 115 million hryvnia annually, and the total value of transactions with the counterparty exceeds 10 million hryvnia. In this case, those entities have to prepare a transfer price documentation and file it accordingly to the tax authorities. I think this was the high-level overview I wanted to present, and I'm sure I'm also within my time budget.
Thank you very much, Mr. Serles. Next in line would be Artem Barinov of Schneider Group. Artem, the floor is yours.
Thank you very much. Hello, colleagues. Please let me share my presentation. Do you see it?
Yes.
Okay. So my topic is related to personal income tax and military levy and unified social contribution, which are in general are related to mostly payroll taxes in Ukraine. So I will present the most interesting topics in relations to what business needs in respect of the mentioned taxes. So within my presentation, I will speak about the general description of these taxes, understanding of who bears the costs in respect of each of the mentioned taxes, how the payroll is calculated in brief, what are other individual income that could be taxed with personal income tax and military levy, and we also will be speaking of certain compliance risks to watch out for. So first of all, a general overview of Ukrainian payroll tax system. So basically, Ukraine payroll taxation combines the employee side withholding and employer side social contribution, which means that from the salary of the employee, such taxes as personal income tax and military levy are withheld, and the employer accrues the social contribution on top of the salary. And the net salary from the point of view of the employee and from the point of view of employer and the employer costs as well, they are usually not equal figures. And I will show you the example of this later in my presentation. Who pays what in terms of personal income tax and military levy and unified social contribution? So from the point of view of the employee, the gross salary is reduced by the amount of PAT and military levy. And from the employer point of view, the gross salary is increased for the amount of unified social contribution, which forms the total employer costs. And for the employee, all these deductions are making the desired net level of salary. How the personal income tax works. So basically, there is a standard rate of 18% PAT. And in the first hand, the employment income as the salary and all the other similar types of income have to be taxed with the PAT. And as well, there are other different types of income that are subject to PAT in Ukraine. The main characteristics of this tax are that it's withheld at a source. It's paid in most cases by the employer to the state budget as the tax agent, but in certain cases, also the individual person who is not an employee is also responsible for independent payment of this tax to the state budget. What could be the tax base in terms of, in the first hand, we will speak about the employment. So for payroll purposes, the taxable income is not only the basic salary, it may include quite many different cash and non-cash benefits, such as various salaries, insurance allowances, using the company car for private purposes, housing relocations, and compensations of different types. So all these benefits are usually taxed, and the employer is responsible for taxation of PAT in this case. And in certain cases as well, there is a special calculation, not only 18%, but the special coefficient have to be applied to correctly calculate the tax obligation. So our advice in this case that before providing certain benefits to your employees, you have to understand the tax treatment beforehand. What are the other income types that are subject to personal income tax? So this could be related to dividends, royalties, investment income, certain gifts and inheritance, rental income, sale of different objects, foreign source income, and so on. There are different rules and different rates also related to types of income other than the employment income. I will not go into details, but the general rates that are applicable could be from 0 to 9% from the amount of income. Another important tax, which is similar in its nature to personal income tax, is military levy. Its basic rate is 5%, and it is applied in addition to personal income tax and withheld from taxable income. In both cases, like from employment income and other types of incomes, it's functioning in a way like PAT does. So in most cases, you can just say that this is additional 5% of increase for personal income tax. Although formally this levy is of temporary nature, it was introduced for reinforcement of Ukrainian armed forces, and it was for the long period at the rate of 1.5%, but last year it was increased to 5%, and recently as well the duration of this interim tax duty was also prolonged till the end of the martial law and plus 3 years afterwards. So as we do not understand when the war comes to an end and when the martial law comes to an end, this duty is with us for a long time. So as I said, the overall process of taxation is the same as in case of personal income tax. It is related both to employment income and other types of income. Now we are speaking about the unified social contribution. So this is the employer side charge, which is in case of paying the salary to your employees. Employer has to accrue and calculate on top of the gross salary amount paid. Usually there is a special taxation base. So in most cases, it is the amount of gross salary, but as well there are minimum taxation base, which is based on minimal salary in Ukraine. You can see the current figures, although there are plans to significantly increase these numbers starting from the second half of this year. And as well, there is a maximum taxation base for the USC, so-called cap, which is equal to 20 minimal salaries. And it means that in case if the salary or any other income of your employee exceeds this amount, then the cap, the USC will be paid only from the amount under the cap and will not exceed this number. You can see on the slide the example of payroll calculation, so how it looks like from the employee point of view. When we, for example, have the salary of 100,000 hryvnia, then PAT and military levy are divided, are withheld from this salary, and the net salary will be 77,000 hryvnia. And from the employer point of view, the gross salary of 100,000 hryvnia will be increased to 22%, by 22%, and the total employment cost will be 122,000 hryvnia. So in general, if you plan to hire employees, you should be ready that if the employee would like to have some net salary, which is home take salary, you have to be ready that the increase of your total employment cost will be around more than 40%. A couple of words about the compliance. So as Thomas Otten told, there is already some practice to hire private entrepreneurs and provide them with functions of employees. However, this is subject to control by the Ukrainian tax and employment authorities and might bring certain risks. And the last slide from my side, this is about reporting, payment, and compliance of your company as the employer. So when you pay the salary and is responsible for taxation, you have to calculate, withhold, pay, report, and save the documents for all the income paid and taxes paid in this case. Thank you for your attention. I hope I was in time, and I will be ready to answer your questions at the end of our webinar.
Thank you very much, Artem. Of course, our guests are welcome to post questions that they have in the chat, and we will also share. I believe we can also share the presentations that are given, if you don't mind. But let's go on with our fourth expert, Oleksandr Minin of KM Partners WTS Consulting. Oleksandr, the floor is yours.
Thank you. Good morning. And let's continue now with VAT, which is also, just a minute. I hope that you see
no.
The presentation. Sorry.
It's coming.
Sorry. Oh, yeah. Now should be on the screen, I hope.
Mm-hmm.
Yes. Okay, VAT in Ukraine, well, quite important topic as well for any business, well, and you may find a lot of similarity to the EU system. Actually, Ukrainian VAT legislation is based initially on EU directive, yet there are certain significant, I would say, difference, first of all, in respect of administration. There is some overemphasized role of so-called system of electronic administration of VAT, where the state, the tax authorities, has possibility for the direct involvement into the administration. There is requirement on centralized electronic issuance and registration of VAT invoices that basically, well, the state sees in real time, well, manner all the transactions which are subject to VAT. And also what is important that the tax authorities have right and use this right, well, to block registration of VAT invoices when they believe that the transaction is suspicious or something is wrong in this respect. And there is high focus on what is in VAT invoices in respect of formalities. Basically, for all the goods should be not just the description, but also, well, codes under the customs classification. For the imported products, well, full customs codes are to be used, well. For the local products, principally may be limited to just 4 digits, but basically this provides possibility for the state to monitor everything in digital manner. And I would say that there is basic intention to control everything digitally. Rates, basic rate is 20%, 14% is for certain agricultural products, yet the list is quite limited. 7% is for registered medical products, hosting services of hotels and similar establishments, and certain entertainment events. Zero rate VAT is for majority of exports of goods, certain defense products or intended for defense industry. There are also certain exemptions from VAT. There are general and specific exemptions. For instance, as specific exemptions, which may be important for the cross-border operations, there are exemptions from VAT on the works and services and goods provided at the cost of international technical support. But what is important that it is not done automatically. There are applicable administration procedure. Such projects shall be registered with the Secretariat of the Cabinet of Ministers and be within auspices of one of international treaties of Ukraine. There is also a requirement for the executor of the project to register, respectively with the tax authorities, and to report on the purchases. So the tax authorities may match data of the suppliers, which are then supplied the products, goods, and services without VAT, and of the executor of the project on these purchases. Cross-border services to outside of Ukraine are generally subject to tax at the standard rate 20%, yet there is no VAT in case the deemed place of supply is defined under the tax code as being outside of the territory of Ukraine, which shall be the case when the services are supplied to non-resident and qualify as the listed type of services, such as provision of IP rights, advertising services, consulting, engineering, legal, bookkeeping, audit, software development and testing, information services, provision of personnel provided that it happens abroad, leasing out movable property, except for transport vehicles and safe telecom services, radio TV broadcasting, intermediary services and the above, media content movies production, services of providing access to cross-border energy links and related services. Other services and works, even provided to non-residents, are generally subject to 20% VAT in Ukraine. That shall be noted well. Inward cross-border services are also generally subject to VAT in Ukraine at the standard rate of 20%. In such case, Ukraine recipient business entity is responsible for paying VAT, and there is no need for the foreign supplier to register in Ukraine and to pay this VAT. Specific situation may be when the foreign supplier establishes or is deemed to have permanent establishment in Ukraine. This permanent establishment may be registered for VAT purposes. Such registration is mandatory if the taxable supplies through the permanent establishment exceed 1 million hryvnia, which is slightly below 20,000 euro. VAT registration is also required for the provision by non-residents of certain IT or internet and IT-related services, provided that they exceed threshold established by the law. Basically, that's for main IT internet-related services such as Starlink and the other ones. And the purpose of this registration for these international companies, because these services are provided to the general public, basically, and thus there is no place for the reverse charge mechanism in case the services are received by businesses in Ukraine. As I said, for non-residents, quite limited VAT registration requirements, and if supplied to Ukraine, basically no need to register for VAT purposes in Ukraine. Exemptions are only when the supplied is through the PE established in Ukraine, which PE shall then register certain IT and IT-related services. And I would mention again that specific registration, which is not as VAT payer, but for the specific purposes of assuring exemption from VAT for the projects of international technical support. In such case, if executor of this project is a foreign entity, it still has to be registered in Ukraine, but as executor, not as VAT payer. And basically, the obligation is to report to the tax authorities on the plan of purchases under this project and which purchases actually happened, so that to verify for the tax authorities that these purchases are exempted from VAT by the suppliers on a proper base. So this may be also the case, but it is not registration as VAT payer, that specific registration. To mention that there is no possibility to register in Ukraine just for VAT purposes, as may be done in some EU countries, specifically for the purposes of getting refund for VAT incurred in Ukraine for business purposes. So specific VAT registration by non-residents is not possible, and thus if a non-resident is charged VAT by the Ukrainian supplier, this VAT is basically non-recoverable cost for the non-resident recipient. VAT refunds principally may be provided and shall be provided in case of negative VAT balance, basically regardless of the reasons for such negative balance. It may be for export-oriented industry when exports are supplied at zero rate VAT and local purchases are with 20% or specific rate VAT. So there is cumulated VAT, which principally shall be refunded, but this refund is provided only upon specific application of the taxpayer. Otherwise, this VAT credit is carried forward indefinitely. There are certain exemptions for the VAT refund for certain negative VAT balances. For instance, there is no VAT refund in case the negative balance is caused because VAT was paid on the property or goods which were lost because of the warfare. Unfortunately, then this VAT is treated, related VAT is treated just as a cost and not subject to VAT refund. Also theoretically, VAT refund might be possible and work properly, but practically, VAT refund may be quite burdensome, and practical possibility to get VAT refund significantly depends on the state of budget funding available for this refund. May be quite burdensome practically if no funds in the state budget. And then the tax authorities do everything in order to delay with the tax audits, with then going into the disputes, etc. So VAT refund generally may be possible. For the general exporters, yes, it's working, but it may depend on the actual situation with the state finance available for such refund. Tax administration, as I said, is based significantly on centralized register of VAT invoices, which is handled by the Central Tax Office. As I said that, there are possibility for the tax office directly interfere into the registration process and stop this registration, in which case the buyer has no right, for VAT credit and VAT refund. There are also strict deadlines for issuing electronic and registered VAT invoices, and heavy penalties for non-registration or delay with registration. Basically, the system is not just the registration system, it's also control system. That's VAT invoices may be issued and registered only within the limits calculated by the administrator as anticipated VAT credit, or admitted VAT credit. Basically, it is calculated as cumulative or already available VAT credits, on incoming VAT invoices, VAT paid to the customs, as well as 1/12 of the actual VAT for the last 12 months period, as allowed overdraft. And this limit is reduced respectively for the amount of each specific VAT invoice. While this system was introduced to provide, basically full assurance that the VAT will be paid to the state budget, still there are a lot of disputes on VAT. I hope that, that basically provides the idea on VAT in Ukraine, and we may continue with any specific question in then following question and answer session. Thank you.
Thank you very much, Oleksandr. There's just one to go. Dr. Ivan Shynkarenko, your colleague, Oleksandr, of the same company. Thank you. Ivan, the floor is yours.
Hello, everyone. My pleasure to be with you here today. Can you see my presentation?
Yes.
So it's sorry, it's not the beginning. Here we are. So let's talk a little bit about customs regulation in Ukraine. So it's related to the taxes, but somewhat different because other authority is in charge for customs in Ukraine, plus customs, various taxes is mostly about money. Customs may block your supplies to Ukraine or out of Ukraine, or even seize the goods. Therefore, yes, customs regulation is also quite an important matter in Ukraine. So let's start. Let's start with the customs payments. So in Ukraine we have naturally customs payments for the cases of importation of goods and exportation. In case of importation, we have import duties. Generally, there are three categories of rates. First is preferential. Here mentioned this is the rate applied in accordance with free trade agreements concluded by Ukraine. Reduced rate, it's WTO countries or countries with which Ukraine has bilateral agreements providing for the most favored country regime, and full for the rest of cases. Full rates, an average of 15% customs tariff for the goods, and the preferential reduced vary respectively. So the other category is excise taxes. So it is limited to so-called excisable goods, and this category is quite broad in Ukraine. It includes such natural items such as tobacco, alcohol, etc., but also energy, cars, and such kind of goods. The rate may be set in lump sum or as a percentage, and depends on the type of goods. And the import VAT. So as Oleksandr mentioned, we have general 20% of import VAT, which is declared and paid at customs, or 7% for medical products and 14% for some agricultural products. When in exportation, we have export duty for some products, for example, sunflower seeds or other types of products where Ukraine decided to institute such export duty to promote some processing in Ukraine of the raw materials or something. And the general rate of VAT set at 0% on exportation. Plus, in case of exportation and VAT, we have now introduced during the military time of special export security regime for agricultural products, which may delay the application of the zero rate of VAT or deny entirely, so upon certain conditions. So this regime principally aimed to ensure that during the wartime, monetary payments to Ukraine are not lived abroad, or and to promote detonization of Ukrainian economy in the most the sectors with the highest rate of abuse. So the other important topic is customs valuation, basically the way how you calculate the base for applying customs duties, VAT, etc. on cross-border transactions. The system of Ukrainian customs valuation at import is based on international practices, notably on the agreement on implementation of Article 7 of GATT. So the basic method is transaction value, so it's basically contractual price, and the other methods are applied in case the basic one, primary method, could not be applied. For example, in case the customs authority thinks that relations between the parties to the transaction influenced the price. We have also now some kind of not standard system of customs valuation on export. Initially, it was only first method, as denoted here as basic. So basically, the invoice or pro forma invoice price was taken as a customs value, but in recent years it was broadened. For example, there is a special rule for the goods subject to export customs duty, whereas the reference is made that the customs value could not be lower than the arithmetic mean of quotations on international commodity exchanges for respective products, because once again, when we are speaking about the export duty. It covers mainly commodities, which Ukraine is interested in processing in Ukraine. And therefore, it's some control to avoid attempts to minimize export customs duties by specific pricing. And also a special rule for the rule I mentioned regarding the export security regime. So it is a rule linked to the so-called minimum export prices for the number of commodities, which is set by the Ministry of Economy. So the other point is customs classification. Basically, the applicable rate of customs duty depends on the customs code, which is determined by the procedure of customs classification. Ukrainian customs classification is based, it's called UKTZ in Ukraine, and based on the harmonized system developed by the World Customs Organization and also combined nomenclature of EU. Also, Ukraine provides some specific Ukraine subsections on the national level for one or another purposes of Ukrainian economic policy. To cite an example, we have specific customs code, for example, for concentrated juices. So it has a reduced import customs import duty rate, and it is aimed at promoting in Ukraine of juice production industry, actually. So here is Ukraine specifics. Well, preferential regime. Ukraine has quite a number of free trade agreements concluded. The most notable one is a comprehensive free trade agreement with the EU. The EFTA, Canada, Georgia, Israel, North Macedonia, Montenegro, United Kingdom, Moldova, and also two free trade agreements are currently in the process of coming into force. The one with Turkey, which is to be ratified by Ukrainian parliament, and the other with the United Arab Emirates, which is to be ratified respectively by the Emirates. So these free trade agreements provide for some reductions of customs duties, mutual elimination of customs duties on imports, and Ukraine also have taken obligations for elimination of export customs duties under some foreign trade agreements, for example, agreement with the EU. So all these preferences are applicable provided that the preferential rules of origin are met. So let's speak a little bit about these rules. So Ukraine is a party to the Regional Convention on Pan-Euro-Mediterranean Preferential Rules of Origin, Pan-Euromed, as is our PEM convention, as widely known. So if parties to the cross-border transaction are parties to this Pan-Euromed convention, its rules of origin are applicable for Ukraine. So naturally, it's all the transactions with EU countries are covered by these rules of origin provided by the BEM Convention. We also have specific preferential rules of origin under specific free trade agreements, and also non-preferential rules of origin, which are provided by the national legislation, Customs Code of Ukraine. Well, these rules of origin, it should be noted, are important not only in terms of preferences on the bilateral FTAs, but also in view of prohibitions for importation to Ukraine of goods originating in certain territories, for example, from Russia. Therefore, it is advisable also always to have some proofs of origin, because Ukrainian customs authorities, if they do not see clear evidences of the origin, may suspect that or assume that the goods originate from the banned territories and simply prohibit the customs clearance to Ukraine. Well, let's move further. So customs regimes. We have currently 14 customs regimes. Customs regime is the set of rules, of customs rules, which define the procedure of customs clearance and the legal status of the goods and applicable customs payments, depending on the purpose for which goods are crossing the border. So naturally, the most applicable regimes are import and export regime, also transit, some specific regime as customs warehousing may be useful for international trade when the sellers do not have partners, established partners or legal entities in Ukraine. So you may bring your goods and place it on the customs warehouse in Ukraine without payment import payments and look for the buyers in Ukraine, and after finding the one to clear the goods into regime of importation, for example. Yes, so also such regime as inward processing regime is widely used for establishing tolling operations in Ukraine when the material provided by to Ukrainian producers is subject to processing for aiming for the selling outside of Ukraine. This regime is also quite often applied by Ukrainian businesses. So let's move. Customs simplification. We have several years ago the system of specific customs simplifications was introduced to Ukraine. So we have two types of categories that companies may receive. It's AEO, authorized economic operators status, which are of two types and receive some specific simplifications in terms of dealing with the customs and customs clearance. For example, one of this most notable simplification is the possibility to customs clear the goods at the premises, at your premises in Ukraine, if you have this status and respective authorization. So also there are some specific procedures connected to such simplification, plus specific transit rules such as NCTS. Ukraine is also part of the TIA convention in case of transit. Let's move to the final part. It's liability for customs offenses. So we have a quite sophisticated system. There is a liability for legal entities, which is generally the same as for tax. It's penalties for underpayment of customs duties and taxes, which are up to 25%. And but we additionally have quite a specific system of liability of customs for customs offenses against individuals. So it's may be applied against officers of legal entity, and it may apply sanctions as penalty up to 100% of the goods value, and implies also seizure of the goods. And we have also criminal liability, but often the size of the sanctions and the first mentioned, so-called administrative, are heavier than the criminal as such, because the amounts of liability may be quite huge, and the subjects may be usually Ukrainian customs officers tend to apply it against general management of the legal entity. So it's important specific matter which requires payment attention to it. Actually, in brief, thank you for your attention. Just one point to mention. Currently, the comprehensive draft legislation new is considered basically implying implementation of Union Customs Code translated to Ukrainian legislation. So we could soon see quite significant reforms in this sector. Thank you.
Thank you very much, Ivan. I have not seen any questions in the webinar chat. Is that correct? I'm asking Yuri and Anna. If not, we are overdrawing a bit, but of course we can do this. And please, if someone has a question to one of our presenters, please come forward. There's obviously, I can't see anyone raising hands. Thank you very much. Is it okay to share all the presentations with all the participants? If that is okay, we will share the presentations with the participants. Maybe there are people that want to follow up by asking an individual question and maybe not in public, since all of these are also sensitive issues. Okay. Thank you very much for keeping the time so that we could do this in about 65 minutes. I hope this has been useful to the participants of the webinar, and thanks again to all the presenters for the time and the effort that you have spent. Thanks a lot and have a good day.
Thank you.
Thank you. Have a nice day. Bye-bye.
Bye.
Bye-bye. Thank you.
So.